Hello everyone, welcome back to my YouTube channel. Subscribe, share, like, comment and hit bell icon to get notifications about my new videos. In this video, I am going to discuss with you a problem which is related to passing journal entries which is related to royalty accounts. Let's begin. Hello everyone, welcome back. So in my previous video, I have discussed with you about the journal entries which are related to royalty accounts. And in this video, I am going to discuss with you a problem which is based on preparation of royalty chart and passing the journal entries. Okay. So first I will read the problem. ABC Publishers acquired the right to print and sell the textbook of the author on a royalty of rupees 2 per book printed and sold. So here royalty is fixed rupees 2 per book with a minimum rent of rupees 10,000 per annum. Minimum rent is fixed 10,000 per annum. Next, each year's excess of minimum rent over actual royalties is recoverable out of the royalties of the next 2 years. So this is what? This is nothing but recoupment of short workings. The short workings will be recouped up to next 2 years. Here, 2 columns are there, year and number of books printed and sold. 2015 2000 books, 2016 3000 books, 2017 5000 books, 2018 6000 books. So with this information they have asked to pass the necessary journal entries in the books of ABC Publishers. Okay. So to pass the journal entries, first of all we have to prepare royalty chart. Here they have not asked to prepare royalty chart, they have just asked to pass the journal entries. But first we have to prepare a royalty chart and then we can pass journal entries. Okay. So let's start the solution. Okay, this is what the royalty chart which I have discussed with you and I have taken so many problems on this royalty chart in my previous videos. If you not gone through those videos, please go through it. So this is what the royalty payable chart. So years 2015, 16, 17, 18. Output, this is output is nothing but number of copies, that is books printed and sold. 2000, 3000, 5000, 6500. Actual royalty. So actual royalty is fixed. How much it is? Rupees 2 per copy. Okay. So 2000 into 2, 4000. 3000 into 2, 6000. 5000 into 2, 10,000. 6500 into 2, 13,000. This is minimum rent. So minimum rent is fixed, which is given in the problem. So how much it is? It is 10,000 per year. So 10,000, 10,000 for all periods. Okay. Now next column, short workings. So what I told you about short workings in my previous videos, when actual royalty is less than minimum rent, the difference is called as short workings. So actual royalty is 4,000, minimum rent is 10,000. So actual royalty is less. So how much it is less? It is less by 6,000. So this 6,000 is called as short workings. So surplus, there is no surplus. When there is surplus, when actual royalty is more than minimum rent. No surplus, no recovery of short workings, no irrecovered portion, and royalty paid is whichever is higher, actual royalty or minimum rent. So here minimum rent is higher, so 10,000. Okay. So next 2016, see short workings. So actual royalty is 6,000, minimum rent is 10,000. So actual royalty is less than minimum rent. So how much it is less? It is 4,000. Okay. So short workings is 4,000, no surplus, no recovered, no irrecovered, royalty paid is 10,000. Okay. And these whatever short workings are there na, they are recovered within next 2 years, which is given in the problem. So 2015 short workings can be recovered in 2 years. 2 years means 2016, 2017. 2017 is the deadline. For 2016 short workings, this 4,000 can be recouped in next 2 years, that is 2017, 2018. Okay, likewise that. So 2017, actual royalty is 10,000, minimum rent is 10,000. So both are equal. So when they are equal, there is no short workings, no surplus, no recovered, no irrecovered. Royalty paid is 10,000. Okay, I think you got this point, and I have in my previous videos I have discussed so many problems on this. In 2018, see what happens. Actual royalty is 13,000, minimum rent is 10,000. So actual royalty is more. When actual royalty is more, there is an existence of surplus. So how much surplus is there? Surplus is 3,000. Okay. Now see here. Okay. So one correction is there regarding 2017. Let me clarify it. See, this short working of 6,000 can be recouped up to 2017, but there is no surplus amount in 2017. Nah? So therefore, this 6,000 is irrecovered portion. Okay. So this is small correction. Okay. Now, in 2018, surplus is 3,000. Okay. Now, see, how much short workings is there? This 2016 short workings can be recouped up to 2018. So 4,000 is there. How much surplus we have? We have only 3,000 surplus is there. So maximum how much we can recover? We can recover only 3,000. And how much is irrecovered portion? So 4,000 minus 3,000, it is 1,000. Actually 4,000 should be recouped, but only available excess surplus is 3,000. So 3,000 is recovered. So 3,000 is recovered, 1,000 is irrecovered portion. Now royalty paid. See here, whichever is more should be paid. Actual royalty is 13,000, minimum rent is 10,000. Actually 13,000 should be paid, but we have recouped the short working of 3,000. So 13,000 minus 3,000, it comes to 10,000. Okay. So this is what the royalty chart, and this is required to pass journal entries. Okay. Now in my last video, I have told you about the journal entries, and let me briefly just summarize this. So what I told you about journal entries. So before passing journal entries, there should be, you have to confirm two things. When actual royalty is less than minimum rent, or whether actual royalty is more than minimum rent. And when actual royalty is less than minimum rent, if minimum rent account is maintained or minimum rent account is not maintained. These are the two separate conditions. Okay. So and these are the journal entries. See, when actual royalty is less than minimum rent, there are how many journal entries? Total 5 journal entries are there, and these all are not applicable. So whichever entries are applicable, those entries only we have to consider. And see one more thing, whether there is actual royalty is less than minimum rent, or actual royalty is more than minimum rent, or minimum rent account is maintained or minimum rent account is not maintained, the journal entries are generally 5 journal entries with slight differences are there. And in my previous video, I have gone through much in detail about these things. Okay. So let me start the solution for this. See, this is the format for journal entries. Journal entries. So date, particulars, ledger folio, debit and credit. Okay. So now see, first what we have to see for passing journal entries, we have to pass journal entries year wise. Okay. So first we have to pass the journal entries for 2015, then 2016, then 2017 and then 2018. For each year maximum 5 journal entries will be there. Okay. And if short workings are not there, recoupment of short working is not there, then those entries will be reduced. So let me take first 2015. Okay. So first what we have to see, whether actual royalty is less than or more than minimum rent. See here, actual royalty is less than minimum rent. When actual royalty is less than minimum rent, and when minimum rent account is not maintained, because in the problem they have not mentioned about minimum rent account, then these 5 journal entries will be applicable. When royalty earned, when payment is made to the landlord, for transfer of royalty to the profit and loss account, for recovery of short workings, for irrecovery of short workings. So here, out of these 5 journal entries, only first 3 journal entries will be applicable. Why these first 3 journal entries are applicable? Because in this problem what happens, there is no recovery of short workings and no irrecovery of short workings. So this journal entry number 4 and 5 will not be applicable here, because there is no recovery of short working, no irrecovery of short workings. So only these first, second and number 3, these 3 journal entries will be applicable. Okay, so let me start. So the first entry is for royalty earned. So what is the journal entry for royalty earned? See here. Royalty account debit, short workings account debit to landlord account. Okay, I will write this over here. So royalty account debit number 2, short workings account debit to author's account. Okay, so just see here amount in the problem. So how much is the royalty? See here, royalty is 4,000, short workings is 6,000. So total amount paid to author is 10,000. So royalty is 4,000, short workings is 6,000 and amount paid to author is 10,000. So being royalty due. Okay, this is first journal entry. Now the second journal entry is for when payment is made to landlord. So landlord in the sense here author is there. So the journal entry is author's account debit to cash account. So how much paid to him? 10,000. 10,000. 10,000. Being royalty paid. Okay. Now the third journal entry is for transfer of royalty at the end of the year to profit and loss account. So P&L account debit to royalty account. So P&L account debit to royalty account. So how much it is transferred? So it is 4,000. Okay. So being royalty transferred. Royalty transferred. Okay. Now see, the entry number 4 and 5 will not be applicable over here. Why it is not applicable? There is no recovered and irrecovered short workings are there. Okay, so only 3 entries will be applicable here. Now next, 2016. See, in case of 2016 what happens? See in the chart, there is no recovered amount, no irrecovered amount. As in the case of 2015, same entries will be repeat over here. The first entry is for royalty due, the second entry is for royalty paid, and third entry is for royalty transfer to profit and loss account. Okay, these above three entries will be applicable over here. So I will write it over here: royalty account debit, short workings account debit to author's account, being royalty due. See amount here, royalty is 6,000, short workings is 4,000, actual royalty paid is 10,000. So 6,000, 4,000 and 10,000. Okay, 6,000 royalty, 4,000 is the short workings, and total royalty paid is 10,000. Next, second one is author's account debit to royalty account, being cash paid, or you can write royalty paid, being cash paid. So how much cash paid to him? Just imagine 10,000 is paid. Okay, 10,000 I will write it here. Okay, and the third entry is for transferring royalty to P&L account. P&L account debit to royalty account, being royalty transferred. So how much royalty is transferred? See, 6,000. Okay, so see here also, entry number 4 and 5 will not be applicable because there is no recovered portion and irrecovered portion. Now 2017. So in case of 2017, first go through the royalty chart. Okay, so see here in 2017 there is no recovered portion, only irrecovered portion is there. So here how many entries will be there? There are 3 entries for royalty earned, for royalty paid, royalty transferred to P&L account, and fourth one for irrecovered portion. Out of 5, 4 entries will be applicable, one more entry for irrecovered portion. So which are those 4 entries? See, first entry, second entry, third entry, and recovered portion. This entry is not applicable. Which one is applicable? So this irrecovered portion. So 6,000 is irrecovered, na? So this entry is applicable. So I will write here, the first entry is royalty account debit to author's account. Now you may ask me why short working is not considered here. See here, in this case what happened? Here actual royalty and minimum rent are equal. Okay, so what is the journal entry for this? See here, royalty account to landlord account. So short working is not there, so that is why it is not considered. So this is applicable when actual royalty is more than or equal to minimum rent. So here both are equal, na? So therefore there is no short workings. When there is no short workings, so short working account is not considered over there. So being royalty due. So how much it is? 10,000. Now second entry for what? Just imagine it is for cash paid. So what is the entry? Author's account debit to cash account. Being cash paid. So how much cash is paid? 10,000, because royalty is 10,000 na? So 10,000 is paid. Okay, now third entry is for what? So just go through that format which I have given. The third entry is for to transfer royalty to P&L account. P&L account debit to royalty account. So amount is 10,000. So being royalty transferred. Okay. Now the fourth entry. Okay. So fourth entry is for what? See here in the format only what they have given, irrecovered portion is there na. So how much it is? 6,000. So for irrecovered portion, what is the journal entry? See, for irrecovered short workings, P&L account debit to short workings account. Profit and loss account debit to short workings account. Being irrecovered short workings transferred to P&L account. And how much it is transferred? It is 6,000. Okay. Now 2017 is over and now here 2018. See, in 2018 recovered portion is there, irrecovered portion is there. So all 5 journal entries will be applicable here. So actual royalty is more than minimum rent. Okay. So when actual royalty is equal to minimum rent or more than minimum rent, then there is no short working. So that is why this first journal entry will be applicable. So along with these 4 journal entries, one more journal entry which is applicable, that is for irrecovered portion. Which one that journal entry? C, for recovery of short workings. Landlord account, that is author's account debit to short workings account. So here all these 5 journal entries will be applicable. So first journal entry, royalty account debit to author's account. The amount is 13,000. So why here short working is not written? Because actual royalty is more than minimum rent. So being royalty due. Now second entry is for cash paid. So what is the journal entry? Author's account debit to cash account. So how much cash is paid? 10,000 is paid. Now you may ask why 10,000 is paid? Because actual 13,000 should be paid, but 3,000 is recovered na, so that is why 10,000. Being cash paid. Now third entry is for royalty transferred to P&L account. P&L account debit to royalty account. Okay. So it is 13,000 being royalty transferred. Next fourth entry is for, see, recovery of short workings or landlord account. So instead of landlord, what we have to use? Author's account debit to short workings account. So in this problem, there is a recovery of short workings. So for this there is a journal entry. So what is the journal entry? It is author's account debit to short workings account. So how much it is recovered? 3000. Being short workings recovered. Okay. Now the last entry is for irrecovered portion. See in the problem in the chart. So for this 1000 we have to pass the entry. So this is irrecovered portion. Na? So what is the journal entry? Earlier we have passed that one, P&L account to short workings account. P&L account debit to short workings account. So being irrecovered short workings transferred to P&L account. How much it is? It is 1000. Okay. These are the journal entries. Hope this is easy one, but you may get confused that this is the first problem. Na? That's why you may get little bit confused, but don't get confused and bothered about this. There are only 5 journal entries. Out of that, how many applicable for your problem? You have to pass those only. First is for royalty due, second is for cash paid, third is for royalty transfer to P&L account, fourth if short workings are there, and fifth if irrecovered short workings are transferred to P&L account. Okay, these are the 5 journal entries. See in books what they have made, they have passed compound journal entries and they have only passed 3 journal entries when there is short workings, recovered and irrecovered. But I have made 5 entries because student may get confused with those compound journal entries. So that's why I have made 5 journal entries. Whether you pass compound journal entry or simple journal entries, there will not be any effect. There will not be any effects. So these are the journal entries. So in my next video, I will cover remaining part. Thank you.